Welcome to our deep dive today. It's on the London Stock Exchange Group. You probably know it better as LSEG.
Yeah, most people do.
We're going to be looking at their 2023 annual report.
All right.
So, yeah, this is the place to be if you want to understand how this company really ticks, how they're shaping the future of finance. I mean, it's a fascinating story.
Yeah, and I think one thing that's really cool is how LSEG has kind of moved beyond just, the buying and selling of stocks. They've got their fingers in so many different pies now in the world of finance.
Yeah, you're right. So we should probably unpack those pies a bit.
Yeah.
The report breaks down into three main divisions: data and analytics, capital markets, and then there's post-trade.
Right. And each of those divisions is really catering to a different aspect of the financial market. It's pretty impressive how they've managed to sort of cover all the bases.
Yeah, it does seem like they thought of everything.
Mm-hmm.
So let's look at data and analytics. It seems like this is all about giving investors the information they need to make those smart decisions.
Right. Information is power.
Yeah,
Right.
that's what they say.
And in today's world, there's so much data out there that it can be really overwhelming. I mean, I get overwhelmed just thinking about it.
Yeah, me too. I mean, how do you know what's important? How do you even begin to make sense of it all?
Exactly. And that's where LSEG comes in. They're providing that data, but they're also providing the analytics to go with it. So you can actually make use of it. It's not just a bunch of numbers on a screen. And you can see that that's a valuable service. Their organic revenue growth in this segment was 6.7% last year.
Whoa, that's a lot of growth.
Yeah, it is.
So it seems like they're really onto something with this data and analytics stuff.
Yeah, and one of the things driving that growth is their workspace product. That gives, customers access to all this data and these tools.
Okay, so they're not just selling raw data. They're giving you the tools to make sense of it.
Yeah, exactly.
Now, what about capital markets? I mean, this is the heart of it all, right? The actual buying and selling.
Right. It's the trading floor, you know?
Yeah. So how is LSEG staying ahead of the game in this really fast-paced world?
Well, they're doing some really innovative things. They've got this platform called TradeWeb, and it used to be just for bonds, but now they're expanding it into equities and money markets.
Wow. So they're not just sticking to one thing, they're branching out.
Yeah, exactly. They're diversifying.
That's smart.
And they're also expanding geographically. So they recently acquired this company called Yield Broker. They operate in Australia and New Zealand.
Oh, wow. So they're going global.
They are, yeah. They want to be the go-to platform for trading no matter where you are in the world.
Makes sense. I mean, the financial world is global now, right?
Absolutely. It doesn't stop at borders anymore.
Okay, so we've got data and analytics, we've got capital markets, and that brings us to post-trade.
Right.
What exactly is post-trade? I feel like a lot of people might not even know what that is.
Yeah, it's kind of the behind-the-scenes stuff. It's all the things that happen after a trade is executed. So you're talking about clearing the trade, settling it, managing the risk. It's crucial, but it's not something that most people think about.
It sounds kind of boring, to be honest.
Well, it might sound boring, but it's actually really important because if those things don't happen smoothly, the whole system can grind to a halt.
Okay.
And LSEG has this subsidiary called LCH that's a major player in this space, especially when it comes to derivatives.
Derivatives, like those things that Warren Buffett called financial weapons of mass destruction.
Well, yeah, they can be risky, especially with all the fluctuations we saw in interest rates last year.
Yeah, that was a wild ride.
But that's where LCH comes in. They act as a central counterparty, which means they basically guarantee that the trade will go through even if one of the parties defaults.
Oh, wow. So they're like the safety net of the financial world.
You could say that, yeah. They help to maintain stability and confidence in the market. And they did a really good job of that last year, considering all the volatility.
It sounds like a really tough job, actually. So, okay, we've got these three divisions: data and analytics, capital markets, and post-trade. And together, they all contribute to LSEG's overall financial performance.
Right.
And the report shows that 2023 was a pretty good year for them.
It was. They did really well. Their total income, excluding something they call recoveries, hit £8 billion.
£8 billion. That's a lot of money.
It is.
So what were the main factors that contributed to this success?
Well, a big part of it was the integration of Refinitiv. That was a major acquisition they made back in 2021.
Right. Refinitiv.
Yeah, and it seems like they've managed to integrate it really smoothly. They achieved their cost synergies ahead of schedule.
That's impressive.
Mm.
Merging two big companies like that could be tricky.
Oh, it is.
But it seems like they did a good job.
Yeah, they really did. And Refinitiv has helped them to boost their data and analytics offerings and expand into new markets.
So it was a strategic move that seems to have paid off.
Yeah, so far so good anyway.
Now, profitability. What about the bottom line? Did they manage to make money while they were growing?
They did, yeah. Their adjusted operating profit increased by 7.9%, reaching $2.9 billion.
So they're not just growing, they're growing profitably.
Exactly. And they actually exceeded their revenue synergy targets with Refinitiv. Their total income, again excluding recoveries, grew at a compound annual growth rate of 6.5% from 2021 to 2023. So it's really exceeding expectations.
Yeah, it seems like they knew what they were doing.
Yeah, it looks like it.
Okay, so let's dive a bit deeper into these financials. Let's start with the income statement. What jumps out at you?
Well, first of all, their total income, including those recoveries this time, was $8.3 billion. And that's an 8.2% increase from the previous year.
So strong growth across the board.
Yeah, pretty much. And again, the integration of Refinitiv played a big role in that. But they also saw some really good organic growth in data and analytics and post-trade. So they're not just relying on acquisitions, they're growing from within as well.
That's a good sign. It shows they're not a one-trick pony. Now, expenses. Were they able to keep those under control while they were growing?
Well, their adjusted operating expenses, excluding depreciation and amortization, increased by 7.7% on a constant currency basis. So that's pretty much in line with their revenue growth. Actually, it's a bit lower, which suggests that they're getting more efficient as they scale.
That's great. That means they're not just spending money for the sake of it. They're being careful.
Yeah, they're being disciplined.
Yeah.
Which is important when you're growing as quickly as they are.
All right, let's move on to the balance sheet. What are the key takeaways there?
Well, the first thing that jumps out at me is the amount of goodwill and intangible assets they have, and that's mainly due to the Refinitiv acquisition.
Goodwill. That's the premium they paid for Refinitiv, right?
Yeah, exactly. It's basically a bet on the future success of the acquisition. And it shows how much confidence they have in the synergies and the growth potential of the combined businesses.
It's a big bet, but it seems like it's paying off.
So far, yeah. But it's important to remember that goodwill is an intangible asset. It's not like cash or property. It's based on assumptions about the future.
Right. You can't just sell it off if things go south.
Exactly. But they also have a lot of tangible assets, like property and equipment, so it's a healthy mix.
Okay, so they've got a strong foundation.
Yeah, I'd say so.
Now, cash flow. That's what really matters at the end of the day.
It is. Cash is king.
So how do they do in 2023?
Well, they generated £3.2 billion in cash from operations. That's a lot of cash.
It is. What are they doing with all that money?
Well, they're reinvesting some of it back into the business, funding things like capital expenditures and research and development.
So they're not just sitting on their cash pile.
Nope, they're using it to grow the business. And they're also returning a lot of it to shareholders through dividends and share buybacks.
Dividends and share buybacks. Those are the two main ways that companies return value to shareholders.
Right.
So they're doing both.
They are. In fact, they completed a $750 million directed share buyback in 2023. That was mainly for their former Refinitiv shareholders.
Interesting. Why did they do that?
Well, it was a way to streamline their shareholder base after the acquisition, and it also helped to boost the value of the remaining shares.
Okay, so it was a strategic move.
Yeah, very much so. And they also paid out a final dividend of 79.3 pence per share. So the total ordinary dividend for 2023 was 115 pence per share.
That's a pretty healthy dividend.
Yeah, it is. And they've announced plans for another £1 billion share buyback in 2024. So they're continuing to return value to shareholders.
That's good news for investors. What about their dividend policy? Are they planning any changes to that?
They are, actually. They've introduced a new simplified dividend policy.
Okay, what's the gist of it?
Well, they're aiming for progressive dividends with a target payout ratio of 33-40% of adjusted earnings per share. So basically, they're trying to strike a balance between paying out consistent dividends and retaining earnings to reinvest in the business.
It sounds like they're trying to keep everyone happy. The investors who want income and the investors who want growth.
Yeah, exactly. It's a delicate balancing act.
All right, last but not least, free cash flow.
Right. Free cash flow is the lifeblood of any business.
It's the cash that's left over after you've paid all your bills and invested in your operations.
Yeah, exactly. And it's the cash that you can use to pay dividends, buy back shares, make acquisitions, or just reduce your debt.
So how much free cash flow did LSEG generate in 2023?
They generated 1.8 billion pounds, which is a pretty impressive number.
It is. So they're not just profitable, they're also generating a lot of cash.
Yeah. And that gives them a lot of flexibility to pursue their strategic goals.
So all in all, it seems like LSEG is in a pretty strong financial position.
I'd say so, yeah. They're growing, they're profitable, they're generating cash, and they're returning value to shareholders.
What more could you ask for?
Not much, really. They're a well-managed company with a bright future.
But of course, every business faces challenges. So let's talk about those in part 2.
Right, but even the best companies face challenges. It's not all smooth sailing.
So what are some of the headwinds that LSEG's facing right now?
Well, one of the big ones, it's a big one for every company these days, is cybersecurity.
Oh, yeah.
Especially when you're dealing with sensitive financial data. One little slip up and it could be disastrous.
Yeah, absolutely. So what is LSEG doing to kind of stay ahead of the bad guys?
Well, they're investing a lot in cybersecurity, upgrading their systems, hiring more people, the whole 9 yards. And it seems like it's paying off. The report mentions that they've reduced technology key risk events by around 58% in the last 2 years.
That's good. That's good to hear. So they're taking it seriously?
Yeah, they are. And they're also constantly updating their risk management framework because the threats are constantly evolving.
Yeah, the bad guys never sleep.
That's right.
Yeah.
So you always have to be one step ahead.
Okay, so cybersecurity is one challenge. What else?
Well, another one is regulation.
Yeah.
The financial industry is one of the most heavily regulated industries in the world, and the rules are always changing.
Yeah, it seems like every time you turn around, there's a new rule or a new regulation.
And it can be really tough for companies to keep up. But LSEG has a whole team of experts who are constantly monitoring the regulatory landscape.
Okay, so they've got people on it.
Yeah, they do. So they can anticipate changes and make sure that they're in compliance.
Okay, that's good. But it's not just about cybersecurity and regulation,
right?
They also have to deal with competition.
Right.
There are other exchanges out there, other trading platforms.
Oh, yeah. It's a very competitive market.
So how does LSEG stand out? What makes them different?
Well, one of their big advantages is their global reach. They operate in markets all over the world.
Right. We talked about that earlier. They're expanding into Australia and New Zealand.
Yeah, exactly. And they also have a really diverse product portfolio. They offer everything from trading to data to post-trade services. So they're kind of a one-stop shop for financial institutions.
Okay, so they've got the breadth and the depth.
Exactly. And they also have a really strong reputation. They're known for being reliable and innovative.
And that matters in this industry.
Oh, yeah. Trust is everything.
So looking ahead, what are some of the big growth opportunities that LSEG's eyeing?
Well, one area where they see a lot of potential is the electronification of trading, especially in fixed income markets. There's still a lot of trading that's done manually over the phone or whatever.
Oh, wow. Really? I thought everything was electronic these days.
Not everything, no, but it's moving in that direction.
So LSEG's trying to capitalize on that trend.
Yeah, they are. They want to be the leading platform for electronic trading and fixed income.
Makes sense. What else?
They also see a lot of opportunity in data and analytics, especially in areas like ESG data and alternative data.
ESG data, what's that?
ESG stands for environmental, social, and governance. It's all about measuring a company's impact on the world, in terms of things like climate change, social justice, and corporate governance.
Oh, okay. So it's like ethical investing.
Yeah, kind of. More and more investors are interested in ESG factors when they're making investment decisions.
I can see why. It makes sense to invest in companies that are doing good in the world.
Exactly. And LSEG is providing the data and the tools that investors need to make those decisions.
Okay, what about this alternative data? What's that all about?
Well, alternative data is basically any kind of data that's not traditional financial data. So things like satellite imagery, social media sentiment, web traffic data, that kind of stuff.
Interesting. So they're going beyond the balance sheet.
Yeah, they are. And they're using this alternative data to provide insights that you can't get from traditional sources.
That sounds pretty cutting edge.
It is. And it's giving investors a real edge.
Now, the report talks about LSEG's medium-term guidance. What are their expectations for the next few years?
Well, they're projecting mid to high single-digit organic revenue growth annually. And they expect that growth to accelerate after 2024.
So they're pretty optimistic.
Yeah, they are. And a lot of that optimism is based on their investments in major platforms, including their partnership with Microsoft.
Right, the Microsoft partnership.
Yeah.
What are they hoping to achieve with that?
Well, they want to leverage Microsoft's expertise in cloud computing and artificial intelligence to enhance their data and analytics offerings and to develop new and innovative products.
So it's all about staying ahead of the curve.
Exactly. The world of finance is changing rapidly, and LSEG wants to be at the forefront of that change.
Okay, before we wrap up this section, I want to circle back to something we touched on earlier.
Okay.
LSEG's commitment to sustainability and diversity. Can you elaborate on that a bit more?
Sure. Sustainability is a core part of their strategy. They've set some pretty ambitious targets for reducing their environmental impact and promoting social responsibility.
Like what? Give me some specifics.
Well, for example, they've committed to achieving net zero emissions by 2030, and they're taking steps to reduce their carbon footprint across their operations. They're also promoting diversity and inclusion within their workforce and their supply chain.
So it's not just lip service.
Nope. They're walking the walk.
That's good to hear. What about their diversity initiatives?
Well, they've set targets for gender and ethnic representation at all levels of the organization. They want to create a more diverse leadership team and a more diverse workforce overall. And they've also implemented mentorship programs and employee resource groups to support underrepresented groups.
So they're really trying to foster a culture of inclusion.
Yeah, they are. They recognize that diversity is good for business, it leads to better decision-making and more innovation.
Okay. So we've talked about LSEG's challenges and their opportunities.
Yeah.
Now let's move on to the final part of our deep dive, where we'll look at their outlook for the future. You know, it's interesting to think about how a company like LSEG, I mean, they're in the world of finance, right? But their work actually touches our everyday lives in a lot of ways.
Yeah, it's true. I mean, most people probably don't even realize it. But LSEG plays a really important role in the global financial system. And that system, it affects all of us.
Yeah, so connect the dots for me. How does LSEG's work affect someone who maybe doesn't even know what the London Stock Exchange is?
Well, think about it this way. LSEG provides the infrastructure that underpins the financial markets, right? And those markets, they impact everything. I mean, the interest rates you pay on your mortgage, the returns you get on your retirement savings, all of that is influenced by the financial markets. And LSEG is right there at the heart of it.
So they're kind of like the behind-the-scenes players that make everything work.
Exactly. They're the ones making sure that the system runs smoothly. And it's not just about individual investors either. Businesses rely on LSEG too.
Yeah, how so?
Well, LSEG provides a lot of data and analytics services that businesses use to make decisions. Things like where to invest, what products to develop, those kinds of things. And those decisions, they have a ripple effect throughout the economy. They can affect job creation, economic growth, all sorts of things.
So LSEG is playing a much bigger role than most people realize.
Yeah, I think so. And the fact that they're committed to sustainability, that makes their role even more important.
Right, we talked about that earlier.
Yeah, and it's not just about being a good corporate citizen. It's about ensuring the long-term health of the global economy. I mean, if we don't have a healthy planet, we don't have a healthy economy. It's as simple as that.
Yeah, that makes sense. So before we wrap up, I want to leave our listeners with a question to think about. What do you think the future holds for LSEG? How do you see their role evolving in this age of technology?
Well, that's a big question. I think LSEG is in a really good position to be a leader in the financial technology revolution. They're already doing a lot of interesting things in areas like digital assets and sustainable finance. And those are areas that I think are only going to grow in importance in the years to come.
Yeah, it seems like they're always looking for the next big thing.
Yeah, and they're not afraid to embrace new technologies. And that's really important in today's world, because the pace of change is only accelerating.
Now, that's a great point to end on. Thanks for joining us on this deep dive into the world of LSEG.
It was my pleasure.
We've covered a lot of ground today, but hopefully you've come away with a better understanding of this fascinating company and its impact on the global economy. So until next time, keep learning, keep questioning, and keep diving deep.